Welcome back, everyone. This week we're going to be talking about the aerospace industry as well as the sub-industries and subsectors that are part of it, with a predominant focus on alloys. Well, not a focus, but my focus in regards to this is about the alloy stocks, which we'll touch upon. And this is another piece from my Substack publication, free of charge, unless you want to pay. The link will be in the description below. With out of the way, let's get into the aerospace and alloy stocks. Hit the runway. Aerospace supply side issues on the back of underpinned demand. There are new difficulties with raw materials, particularly aerospace steel. Chief Operating Officer Alberto Gutierrez tells Show News here at the Paris Air Show. The lead time for steel orders used to be up to 8 months. Now it is 20 months. He says the steel shortage is linked to the much higher demand in the defense industry since the start of the war in Ukraine in early 2022. I find the production challenges and supply chain issues to be compelling narratives from an investor standpoint. Oliver Wyman's Global Fleet and MRO Market Forecast 2023 to 2033 is a worthwhile read for anyone who's interested, but I'll share some of their takes. One of the reasons why you might want to go over to the Substack and subscribe, besides getting things in a timely fashion, is you can at least go over there and see the links that I have in the article. For instance, the Global Fleet and MRO Market Forecast. You can tap on this screen all you want, but you're not going to get the link. But you go over there, you get the link. Okay, out of the way. Production delays. Next, the industry faces hard to remedy supply chain snarls that have already led to longer lead times on parts, sometimes of more than a year. As the industry gradually recovered in 2021 and 2022, production and maintenance were both hindered by suppliers unable to fulfill orders and provide products or services in a timely manner. Not surprisingly, much of the breakdown was related to insufficient number of workers, but supplier capacity problems are only likely to multiply once Airbus and Boeing, the globe's largest aircraft manufacturers, begin to implement planned higher production goals, which they are planning and accomplishing to some extent, which would be difficult to meet even if supply chains were functioning well. Some of their biggest suppliers have already suggested that elevated production may be beyond what they and the rest of the supply chain can handle. All right, I'm not going to read all of this. If you want to, you can freeze the frame and read it because I don't want to lose you, the listener, due to short attention spans. So we're going to look at a lot of names that aren't just Boeing and Airbus. So let's not get carried away. So let's look at some pictures. Drawing with crayons. Let's look at some charts for a primer. If you're not into so-called tea leaf reading, tasseography, no one can blame you. However, a picture is worth 1,000 words, so let's have a look, shall we? In an extremely abbreviated and oversimplified manner, I'll provide a quick explainer to what each of these companies do and where they're located. Airbus makes planes and is based in the Netherlands. If you see this chart, it's bumping up against all-time highs. Is it making a wedge? Don't know. This would be no such thing as a triple top for the Market Huddle listeners. Then you have AerCap, leases planes and is based in Ireland. Similar looking chart. Rolls-Royce, believe it or not, builds a lot of plane engines. They're based out of the United Kingdom. Is this breaking out of a base? Man, they have fallen. let's just say that they have fallen. It's not all pretty though. The above charts are reflective of European names. Let's look at some American comparisons. Boeing makes planes and is based in the US. Two things help explain Boeing's chart. The drama, link in the article, that started in 2018 and COVID. So here's Boeing. That not the prettiest looking chart, especially with the recent drama in Boeing that caused the stock to fall, 7 or 8% in a day. And then it ran really hard for, I don't know, a good moment. I mean, up 50% solid without looking back. Anyway, Air Lease does just that. It leases planes and is based in the U.S. Not looking the best, but not looking the worst either. So far, we've seen some charts setting up for potential breakouts and broken down charts perhaps trying to fix themselves. Well, how about this bad boy? AAR Corp engages in the MRO business. MRO stands for Maintenance, Repair, and Overhaul. They too are based in the U.S. Look at that bad boy. Little triple top, and then it broke out. Does that mean that the other triple tops that I showed you break out? I don't know. As far as I'm concerned, you'll fall into one of a few camps. Camp 1 is, we're at a cyclical peak in aerospace. Second camp is, we're getting ready for a multi-year supercycle. The third camp is, you're bullish but miss the initial move and don't like the entry point and cost basis. Personally, I fear number 1, fall into number 3, but I'm entertaining number 2. The S&P having a strong run-up and pinning 4,444 along with recession woes have me more cautious. Quite frankly, I'm pissed that I missed the initial move in these names. I'm also concerned that I'm a contraindication due to me even talking about it. On a technical level, many of these names are overbought, but that's the funny thing about stocks. Losers keep going down and winners keep going higher. And they rarely give you an opportunity to dip your toe in while they're ripping. And once they consolidate and plateau, you come to believe that that's it and that's going to fall, but then it rips some more. I don't know what will happen. These are merely observations to consider. Special alloy producers, the place that I'm playing the theme. So far, we've covered aircraft builders, leasers, an engine manufacturer, an MRO, and now into the specialty material manufacturers. This goes to show you that there are numerous ways to play a theme. As a complete aside, I like to think of all the ways to play a theme. If you think Venezuela will invade Guyana, do you go long oil, or is there a way to short G2 goldfields or Reunion Gold? Or if you think it's saber rattling, do you buy G2 or Reunion because they dipped hard on some saber rattling as of recently? If you're bullish uranium, do you short LNG? If you think a new build cycle is going to hit offshore oil rigs, do you go long Cetrium? My point is that there's often more than what meets the eye. Andrew Walker of yet another value blog, I don't think that's right, yet another value podcast, YAVP. If you're not subscribed, you're making a mistake. Anyway, in a recent email, which you should go subscribe to for free because it's well worth it, even if you had to pay, he pointed out this sort of outside-the-box thinking in a recent article he published called Disruptors Disrupted. Back to the specialty material manufacturers. These companies produce nickel alloy, stainless steel, titanium, etc. that gets put into planes, as well as defense materials for the military. But let's not forget that it also goes into military weapons, as the quote noted that begun this article. To put it all together, you have specialty alloy manufacturers who sell to component manufacturers who sell to or incorporate it into plane manufacturers that get serviced by MROs or leased by aviation lessors. Starting a specialty alloy company isn't something you start up overnight. The necessary precision, consistency, and standardization of these materials is no joke. You're not producing a titanium wedding ring. You're putting it into a multi-billion-dollar piece of equipment with a multi-decade service life that will fly millions of miles. The qualification set forth by the OEMs and all the government acronyms is onerous to say the least. It's also in an extremely sensitive and cyclical business, which means that most people aren't paying much attention to it, nor are interested in starting their own and competing with current producers. Let's look at some charts, shall we? ATI. I'm not a chartered market technician, CMT, but either these specialty alloy stocks have either reached their peak or they're going to go higher. I know, thanks a lot, Captain Obvious. On the backdrop of supply constraint and airplane demand, I'm betting, quite literally, that they go higher. but that's just me. The rest of this article will be me discussing varying talking points about the airline industry. To me, the airline manufacturers are the focal points of all the sub-industries going right or wrong. The below will be me trying to take the wind out of the sails of the prevailing narratives that I hear. If you're trying your best to dismantle a story and still can't, then that's good, but we must try. I'm biased positively towards the industry. I feel like Warren Irwin. He's bullish uranium, but isn't a Super Bowl. As a consequence of relativism, people think he's bearish, and he gets a lot of hate. It's so strange, but that's how humans work. Here's another name, which I did not include a chart because I forgot. The backlog on some of these names is impressive. Here's USAP, the other name or the other ticker symbol other than ATI that I'm predominantly interested in. So our record order backlog increased 164% since Q4 of 2021. That's quite the backlog. Was that it? Was that the top in Q1 2023? Or were they taking a break? And how will that materialize? Here's a slide from ATI. Strong commercial aero demand gives us confidence. You'll see where this chart was at the beginning of 2023, and then kind of ramps up and goes hard until 2025, 2026. And then doesn't precipitously fall, but instead levels out. But they probably always think that. Airplane demand is set to soar. Is it really though? You have to keep constant your comparisons and control for variables. You have to question the concepts in a statement as much as the statement itself, especially when there's sensational headlines. Jet orders boom as airlines fear shortage. What does boom mean? How are we measuring boom? What is the period from date to date that we're measuring this boom in? Year over year, pre-pandemic, outside the trajectory of historical fleet growth? That would be more of a quantifier. You also have to factor in how percentage changes can be deceiving. If all you knew was the annual growth for global air traffic passenger demand grew double digits for the last 3 years, you might reasonably think that it would be above where it was 4 years ago. In this case, you'd be wrong. Here's the annual growth in global air traffic passenger demand. Just imagine if I said to you, hey man, things are booming. 2021 saw 22% growth. 2022 saw 64% growth. 2023 saw 28% growth. Don't you want to invest in this industry? Well, you'd find out that even with those big, massive numbers, you're pretty much flat and back to where you were, actually slightly below 2019 numbers, because 2020 fell so hard, and that's how percentages work. For instance, after passenger demand crashed 65.8% in 2020, even after adding back 21.8%, 64.2%, and 28.3% of passenger demand in the subsequent 3 years, you end up with a number that is still lower than 2019 demand. This chart demonstrates what I'm talking about. FYI, North America is at negative 11.3% for the dark blue bar, which would be this second from the bottom bar that says North America. I suspect a glitch is why they only provided it under certain circumstances. So here in Exhibit 2, worldwide air passenger demand, December and full year 2022. So what that goes to show you is if you compare 2022 versus 2021, impressive year-over-year numbers. But then if you expand the timeline a little bit longer from 2022 to 2019, all the percentages changes are still negative. The worst being 55%. That's really worth thinking about when someone tries to get you bullish something and tells you the growth of it. This is a danger of using a proxy to measure something else. Passenger demand doesn't necessarily equate to gross orders for airplane manufacturers. It's a piece of the puzzle, but not the end-all be-all. I would have certainly thought that India would be an all-time high, but it's not. The all-time high was fiscal year 2019, and then ever so slightly fiscal year 2020, and then we're actually below 19 and 20 levels. So I'm really surprised by that. Now compare these passenger demand stories with that of Florida. The subsequent charts is one reason why I own St. Joe. Like practically everyone else, Northwest Florida Beach's International Airport saw a decline in total passengers in 2020. I'll go through this slowly so you can freeze it. Total passengers, you'll see it here at the bottom of the screen. That's what we're looking at. But unlike other claims of so-called records framed in a certain light or niche context, such as passenger demand growth, the airport is setting records and has exceeded its prior COVID lows by a wide margin. Here's total passengers. So 165,942 for 2023, and then 2020 had 96,000 passengers. So they're actually seeing growth via passengers. But that's why you use a data point isn't enough generally to reach a conclusion. But it's worthwhile. But be careful when people use proxies to represent something else synthetically. It can be misrepresentative of reality. There's this sort of deception all over the world. Take the below, for instance. Look at where we are now. Just this morning, we learned that the economy created 190,000 jobs last month. All told, we've added 13.5 million jobs since I took office. Around 800,000 of them manufacturing jobs. We created more jobs in 2 years than any president ever created in a single four-year term. We did it in 2 years. Now you might ask, were the jobs created or recovered? Well, you can think similarly for the aviation industry. Is airplane demand being created, or is it recovering with a lag? The question isn't whether there are more people flying. The question isn't are companies making more money. The question isn't are new planes being built. Reproductive proclivities, inflation, and natural attrition of machinery will ensure that they will. A more appropriate question is something along the lines of, is the rate of change of airplane orders inflecting positively above or in line with historical averages? Or, due to underproduction in the last couple of years, and as a consequence of logistics, will there be a period and bump in production that will cause companies to over-earn relative to their normal cyclical performance due to them falling behind? That's a crucial question to answer because it means either a secular theme or a cyclical theme, meaning that one is a set it and forget it, quote unquote, investment and the other is a multi-quarter year trade. The wrong thought process is to fall for a big headline number and decade-long forecast. That in and of itself is an evergreen story that tricks suckers. What was the number a decade ago and what was that forecast? And did the companies and their respective stocks not fluctuate wildly in that decade? The global aircraft fleet, link to this image, has readily risen since the 1960s. In any given year, I could have given you projections for the next decade to entice you to buy my stock. I don't even have to try hard to find these sort of images. Look at these projections. And you see in the dotted lines, projections. Look at 1985, I could have gave you similar projections. 2000, I could have gave you similar projections. Time and time again, pick a day, pick a date, pick a year. 10 years from now, there's going to be more of these things. There's more people, more planes, more wealthy individuals flying on planes, blah, blah, blah. If you're a novice investor, whether that be in aggregate or to the sector, it's easy to fall for these sorts of things. The fact that the fleet is growing is a given. It doesn't aid in your investment decision in and of itself. It's important to understand how this industry works. It's not like a few planes roll off each year and a few more get bought with an ever-steady demand with an upwards trajectory due to phenomenon like India hitting the wealth S-curve. The following depicts that well. Remember too that orders and deliveries are two different things. Airplane manufacturers currently are in a weird spot. Some plane manufacturers have record backlogs, increasing orders, and suboptimal deliveries, which increases the backlog because they can't get the planes built quick enough due to supply chain issues and labor issues. And, well, windows flying off of your plane issues as well. So here's a chart of Airbus gross orders and Boeing gross orders, and you see how it violently fluctuates. So it's not a steady state demand. It might be a steady state delivery because once they ramp up, they start pumping these bad boys out, but that's not to say that the demand is the same, because it's not. You'll also notice the multi-year rally in gross orders coming out of 2019. Will history rhyme coming out of 2020? In 2022, Boeing booked 774 net new orders, 935 gross orders. As of October 2023, Boeing has booked 724 net new orders, 848 gross orders. To me, things look like they're going back to normal after a period of subdued production, which means that they need to play catch up, which means that there'll be a period of time, probably years, where they're trying to make up for the deficit of production. Is the backlog growing because of hyper demand or because they're falling behind in providing planes? This seems to especially be the case for Boeing. Airbus seems to be a different picture. Boeing has been a clusterfuck since 2018. Now don't misunderstand me. This is all setting up bullishly. The evergreen story. Just pull up a random transcript of Boeing and search for demand. There's always some reason demand is strong or the business is less cyclical. Is this time different? Hell if I know. There's reasons to think it is, but that's the evergreen substructure of such statements. They always sound plausible. I'm not trying to be a cynic, but conservative, and they often look similar. The evergreen story is a real phenomenon. Let's say that somehow you've been tipped off that airplane industry is going to do well. You'll pull up some transcripts and start reading. Guess what you'll find? Bullish statements. I invite you to randomly pull up a quarterly conference call transcript and search for the word demand. They try their damnedest to spin a positive story. Sometimes things aren't going well, but they say they're doing well. And sometimes things are doing well, and they indeed are. It's your job as an investor and investigator to determine when it's true and when it's not. I randomly pulled up their Q3 2017 conference call transcript. And here they are. Here's two highlights of the words demand. Read it for yourself. One of the points I'm trying to emphasize in this article is how the chaos since COVID is causing a bunch of large numbers to occur that otherwise wouldn't be. The difference is in narrative. Is this a super cycle or are things just going back to normal? Please keep in mind both can be bullish. To paraphrase Cuppy, when things go from horribly fucked to sort of shitty, you can 3x your money. The following is from the Q2 2020 conference call. He's alluding that since companies are retiring a historic portion of their fleet, it will in the future be met with a similar historic demand for airplanes. Here he said in the conference call, we expect our customers to look at their fleet planning strategies differently in light of these dynamics. More than 2,500 aircraft with 20 plus years of service were in active service prior to the crisis. So far, we have tracked retirements of close to 1,000 of these aircraft across the global fleet. Replacement will not be uniform, as airlines will focus on the oldest and least efficient airplanes to retire. End quote. Throw in the fact that the newly ordered planes will have 25 to 40% more fuel efficiency than the airplanes they're replacing, and you start to have a compelling narrative. Fuel expense is a major cost to airlines, floating at around 20 to 25% of total operating costs. The problem with the fleet retirement story is that it's a one-off. and it's a one-off that creates another one-off. And those two so-called one-offs largely cancel each other out. But they're both eye-grabbing big numbers that can play with your perceptions and emotions. Let me explain. Navio had this, link in the article, to say about 2020. As a percentage of the active fleet, retirements have typically hovered between 1.7% and 3.4%. The average has been 2.5%. The rate in 2020 was 3.1%. Retirements will increase further in the coming years. But, end quote, but in 2021, 1 year later, Navio followed up with this news. The air transport aircraft retirement tsunami that was expected has far failed to materialize. 2021 saw the lowest official retirement since 2007, with only 429 aircraft being recognized as being officially retired from service. As a percentage of the active fleet, retirements have typically hovered between 1.7 and 3.4%. The average has been 2.5%. The rate in 2021 was 1.5%. So that's what I meant by one-off creates another one-off. So 1 year they retire above average. And you could say, oh wow, they're going to have to order a lot of new planes. But then the subsequent year, they retire a below average number of their fleet. So they cancel each other out. If you look on a 1 year timeline, you're like, wow, they're really retiring a lot of their fleet. And then the next year, like, wow, they're really retiring a small amount of their fleet. And then by the third year, it's the same difference. Retirements in 2020 fell within the historic range of 1.7 to 3.4%. Yet retirements in 2021 fell below that same historic range. And even though 2020 saw one of the largest retirements as a percentage of fleet, 2021 saw one of the smallest retirements as a percentage of fleet. It's a wash. If you normalize this over a longer period of time, although both years had jarring numbers, it amounts to the same difference down the road. Yet again, I'm still bullish, but I'm trying to curtail your expectations of a super cycle. Things can do well for an extended period of time due to things being so bad for multiple years beforehand. Getting down to business. I will scroll through this slowly. This is annual orders. I'm just putting this here for the readers who really want to look at it. Looking at Airbus orders and deliveries, link in the article, historically their gross orders hovered around 1,000, give or take a few hundred. As of October, Airbus had 1,241 net new orders. This is in line with historic averages, excluding the so-called recessionary years. Although my estimates of their median or average number is off, my point is that they're not hitting records for gross orders. They're also coming back at a slower pace than they did after the GFC. But look in the headlines, look in the media. Record orders, record this, record, it's like actually like record how? How are you defining record? Because the records show that the records for orders hasn't been hit. Boeing is doing worse than Airbus, and that's probably why you see the divergence in stock performance. This also means that if Boeing gets their act together, they could be an underdog to look at as they would re-rate higher. Just as any good degenerate gambler might bet on the worst performing, highest cost producing miner in a commodity bull cycle, you could argue the same here. Alternatively, it could mean that the demand for special alloys could drastically ramp up if Boeing gets their act together. Although the chart below stops in 2020, Boeing is still radically below their historical gross orders. In 2021, Boeing booked 479 net new orders. In 2022, Boeing booked 774 net new orders. As of September 2023, which is, this article is a month or two old that I just never published, so not the most current numbers, but pretty close. They've booked 510 net new orders. A bet on Boeing could be a bet on Spirit AeroSystems Holdings. If I'm not mistaken, 65% of SPR's revenue was derived from Boeing in 2022. Or it could turn out like a Cirrus Logic Apple situation, in which Cirrus Logic is largely dependent on Apple, yet Apple's success largely outperforms Cirrus Logic. I probably should have put that in the earlier section when I was talking about different ways to play a theme, but I didn't. So here you have Boeing 737 gross orders from 2004 to 2022. Well, 500 some odd orders is not even close to a record, being that the record's floating at 1,200, 1,100 for 3 years. And things, well, really went downhill. But with sensational headlines, you might miss that point. What sensational headlines? Record plane orders raise the stakes in India's aviation boom. Record plane orders for India, not for the airline industry. Right? Funny how you might have missed that in that title. Let's repeat that title, because I do love a good obfuscating, misleading, sensational, emotionally prompting, deceptive headline. Record plane orders raise the stakes in India's aviation boom. So those record plane orders are in relation to India's airlines and airline participants ordering a record amount of planes. And I've seen this misinterpreted multiple times, and I can see why. Now, that's not record plane orders for Airbus or Boeing. Record plane orders for India, not for the airline. Aircraft and engine order backlog hits record high as demand continued to surge in 2023. Backlog as a consequence of supply and logistical constraints, or gross orders being at an all-time high. See, yet again, it's like this industry has done so shitty for the last 3 to 4 years that they now have record backlogs because they can't get their act together and ramp up production and get supply constraints figured out to start actually making the planes to lower the backlog. Like, those two headlines hit a little bit different, don't they? So, like I noted, is the backlog the consequence of supply and logistical constraints, or is backlog the consequence of record global demand reflected in record gross orders? They definitely wouldn't be talking year over year, right? Record planes ordered is the same difference as saying backlog. Does record backlog due to underperformance in deliveries have the same magnitude of significance as record backlog while operations are performing flawlessly and in full force? What's my deal with year-over-year comparisons, you might ask? Nothing per se, but I don't like it paired with the word record, although record is a true statement in the above headline. Imagine investing in SoftBank in 1999 and it falling 90% in value. Then in 2002, the portfolio went up 100%, and your fund manager says, we've had a record year. Like, remember, 1999, it fell 90%, and then kind of bumped along the bottom for a couple of years. Then 2002 had a 100% year. And then your manager says, hey, I'm going to take a 2 and 20 off of that. We had a 100% year. Wow, woohoo. Who gives a shit? You're still severely below the high water mark. It's that sort of framing and context shifting that I don't care for. Unfortunately or not, I'm now overly sensitive to such statements. Although technically true, I find it to be misleading since it doesn't represent the full picture. Hopefully you can appreciate that about me. We mustn't conflate categories or focus on headline numbers. Record demand from Indian Airlines does not mean record demand for Boeing or Airbus. As such, doesn't necessarily mean record demand for MROs, specialty alloys, and so on. Record demand from a consumer is a piece of the puzzle that shouldn't be ignored, but also shouldn't be your sole focus and overemphasized. The chart below nicely outlines how the recent India deals have eclipsed historical records. That's the record demand they're talking about. And here you see it. India Go, 500 ordered. Air India, 210 ordered. Both happening in 2023. And India Go is the highest record after Indigo Partners back in November of 2017 at 430. But you'll see that American Airlines in 2011 eclipsed the record order from Air India here in February of 2013. And then Air Asia back in June 2011 had 200. So record, interesting word. In conclusion, to sum it up, you could say that I'm being nitpicky, but my concern is around the framing of such situations. And I'm concerned about that because a lot of novice investors who don't know any better can be tricked by such things. Just think of how some new age company talking about TAM or non-contractual agreements for their order book, looking at you EV companies of 2021. They were horribly misled. If you don't know about the EVs, let me sum that up real quick. They say we have record orders. Notice that's a similar topic to what we discussed today. Record orders. But they were tentative orders, not contractual agreements orders. And then they say, look at the TAM, total addressable market. But that's not actually the market share that they'll have. And if it is, it'll be decades down the line. So it's just misleading. It's look here, don't look here. Also, just imagine if gross orders actually did reach an all-time high. How bullish would that be? The backlogs would be historically bloated, and this industry could then actually be in a secular supercycle, which means it's currently not, but with this sort of demand growth, it potentially could be, which means it might not be too late to invest. You see how those are crucial distinctions? Narrative over numbers is a dangerous game. Just as a company might defer sustaining CapEx spend for a few years, leading to a CapEx spending boom. But the CapEx spending boom isn't a consequence of increasing demand, but due to mismanagement, negligence, or a previous bad operating environment. Airplane companies are experiencing something similar, especially Boeing. But I find context lacking in much of what I read around this topic. This article wasn't to dissuade you, but to temper your reality. I hope I did just that. To reiterate, I think these sort of companies will have a few good years ahead of them. Of course, that's what people always say at the top of a cycle. This is all to say, do your own due diligence. Regardless of whether it's a bad times leads to better times inflection story or a record demand is creating a supercycle story, things seem to be working in the favor of the aerospace sector and its broader sub-industries. P.S. We've covered many industries in this article, but I have a few quick last thoughts on the airline theme. It's tangentially associated, but still worth a mention. Sustainable aviation fuel. Carbon credits. Those are two different ideas. I don't have much to say on these ideas. I don't know much about them. Carbon credits. Here's a ticker symbol, KCCA. Don't ask me about the intricacies of it because I have no idea. But in 2023, as of the writing of this article, so November, I would say early December, it was up 33% year to date. But there was another global carbon credit one that was down at the time. So yet again, I don't know. In my day-to-day browsing on the internet, I've seen mentions of refineries partaking in renewable diesel and sustainable aviation fuel. CLMT is a name that seemingly partakes in it to some extent. Neste produces sustainable aviation fuel in Europe. World Energy has partnered with APD to build a new factory in Houston. I don't have much more to say on this topic currently as I'm unfamiliar with it. And another one. I came across a Reuters article that said the following. Turkish Airlines surprise announcement on Thursday that it plans to order 600 jets in June spells what could be the fourth mega deal in a few months, upstaging Air India's record order for 470 Airbus and Boeing jetliners. End quote. Turkey's national champion last month, no, not end quote. Well, end quote, another quote. Turkey's national champion last month announced a 10-year strategic plan, including a goal of 170 million passengers by 2033, compared to over 85 million in 2023. So that's a double in a decade. That's good growth. End quote. There's a thought that I have not been able to get out of my head. I've had this thought for the better part of a year now. Chris McIntosh of Capitalist Exploits is the one who inspired it. He outlined this idea while being interviewed on a podcast. He was talking about all the clownery going on in Europe and the UK, 15-minute cities. More specifically, he was talking about an academic network known as UK Fires. Essentially, they're climate activists. They're calling for all the airports, or they were calling, I don't know what they're doing now. This is a couple of years old information. But they're calling for all airports in the UK except 3 to be shut down starting in 2020. Then starting in 2030, for all airports to be shut down. He also talked about how Germany was shutting their factories down and so on. He said something along the lines of how Turkey was going to become the new central hub for airlines traveling in that region. He also has noted how Saudi Arabia is becoming more and more a financial hub too. Saudi Arabia is indeed growing, but that's a conversation for another time. Ticker symbol KSA, I believe, is the ETF. I just can't bring myself to buy it, but like I said, another conversation for another time. Back to airlines. We have Europe shooting itself in the foot on a lot of things, and Turkey trying to grab market share as a consequence. Would Turkish Airlines be something to look at? Might it be a moneymaker? That could be a secular theme too. I don't know enough to elaborate on, but it sure is a thought. All right. Cup of Coffee Capital is a reader-supported publication. To receive new posts and support my work, consider becoming a free or paid subscriber. So with that out of the way, I am now going to do the weekly performance report of my stock portfolio. So here we have it. So uranium, I actually meant to start the video off this way. Happy $100 spot uranium price to everyone. That happened, as they say, suddenly, then all at once. Where does it go from here? I don't know. I haven't sold out of anything, and that's about all I can say on that topic. Kazatomprom came out with some information recently, I believe, about how they're going to fall short of their production, and, that's interesting. Unfortunate for some, and fortunate for others. So, yeah, it hit $100 in the spot market. It's jumping up, gapping up. When do you sell? When don't you sell? Well, if you're being a reasonable fundamental analyst, you could say something like, you would sell everything now. It's, you bought it, theoretically, when it was below the cost of production, and then you then sell it when it has reached the economic incentive costs for new production to come online. And I would say that $100 is sufficient. So under that guise, or standing operating procedure, you would have sold it all, I don't know, $75, $80, $85. Of course, all-in sustaining cost is always a tricky thing. Maybe you think all-in sustaining cost is $75, but that's a video onto itself that I'm kind of surprised I haven't made yet, because it's like, oh, does that count in like cost of capital? Like, why is all-in sustaining cost? Why does that not factor in cost of capital oftentimes? And does that also factor in the write-downs and impairments and write-offs of failed exploration projects that you embarked on? Because, right, the reason you embark upon projects is to replenish your depleting stores of uranium you're mining. right? That's part of sustaining. So then you have to question the concept of, question the concept in the statement as much as the statement itself. And when someone says all in sustaining cost, it's like, what do you mean by all and what do you mean by sustaining? And you're like, oh, so by all in sustaining, you mean not all in sustaining cost minus cost of capital minus money sent to money heaven looking for uranium and finding nothing. That doesn't count the depleting, and that's relevant because you're mining a depleting asset that you'll have to replenish in order to sustain. So it's like, well, sustain what? Not mine output, but sustain revenue, sustain what? But I digress on that point. So I haven't sold anything, and that's that. I'm now up 62% on the URNM. It's funny, markets. So back to my point of selling, before I forget that. At this point, you're kind of playing the greater fool's theory. Or you really think that there's going to be a good squeeze that happens. But then the question is when do you sell the squeeze? And what do you do if the squeeze doesn't come along? But that's too much for most people to factor in, think about, or whatnot. So it's like, fine, you think it's going to squeeze. Squeeze where? Right? And you'll bullshit yourself and say, well, we'll play it by ear. And it's like you're not going to play it by ear. You're not. You're going to wait till you emotionally dump it because you just can't stand it anymore. In all probability. Because what's a ludicrous price? $100, one could say. It's like there's ample uranium in the world. And given enough time, enough of it will come online. I mean, that will compete. The cure for higher prices is higher prices. So, but you might get a quarter or two-quarter pump in the price. You just where's your exit? That's the problem with that strategy. But what I wanted to say was, markets are funny. People. So the day that uranium hits 100, guess what happens? URNM goes up, I think, roughly 10% that day. SRUUF, Sprout Physical Uranium Trust, goes up roughly 10% that day. Well, why? And the answer is, in part, because it hit a psychologically satisfying number. Now, you could also say that they shot up because the gap ups in price are getting more severe and larger in dollar-denominated terms. So that's things really getting going. So people are trying to jump in on that. But how much of it had to do with that psychologically satisfying $100 price? Why was there not a 10% move when $90 price or $80 price or $70 or $60 or $50? Why 100? Oh, that's a sexy number. That's why. And you can say a gap up in nominal dollar terms, it might be getting bigger and bigger, but in percentage terms, it's is it in percentage terms as well? That's a question you should be asking. Why do we care about nominal? Well, because the world is full of idiots who care about nominal and don't care about real. That's why people will tell you to buy a 5% yielding treasury when inflation's 7%. Look at that juicy 5% yield. Relative to recent history, that's an amazing amount. Yeah, while you're telling them to lock in a negative 2% loss because you're comparing something relative to something else and in nominal terms. It's like, I'm going to measure something relative and in nominal terms. And I guess the only response to that is tell me that you're stupid without telling me that you're stupid. So talking about stupid, this is a beautiful transition that I couldn't have planned any better. For those who weren't paying attention last week I bought Green Thumb Industries, cannabis company. And then this past week, I dipped my toe into Glass House and I dipped my toe into Grown Rogue, both cannabis companies. And I'm going to say this. I'm not going to talk about it yet. I'm going to say this. This is, I got a few things to say. And if you're listening, then you're probably a dedicated person. So I'm saying this for you. This predominantly has been this channel has predominantly been interpreted as a hard asset commodity type channel. And that's in part because it kind of is. Now, don't think for a second that cannabis isn't a hard asset commodity channel. Or topic, my apologies. They're growing a commodity, which just that, saying that pisses a lot of people off. They're like, it's not a commodity. It's like, yeah, it's, I mean, you're growing plants, dude. Like, calm down. But, and, I mean, it's a consumer product good company, not healthcare BS. Like, yeah, there's a component of that, sure, but, like, I'm not kidding myself. It's a recreational usage drug that's grown in plant form. It's a consumer pack. I treat it like alcohol or tobacco. I don't really think of the cannabis industry any different than if you said, what is it like tobacco and alcohol? Like, I'm not really sure why that's a point of debate, but just imagine in this channel if I owned Budweiser and Altria. No one would object to that. But then they would object to me owning cannabis stocks. Well, that's because they're having an emotional, visceral reaction. Now, a disparity between the two is that I normally play in mature industries. It's predictable. There's cycles. History has taught you things. The players, all the BS has been shaken out. For the most part, they're oligopolies. They have pricing power. The industry's consolidated, or even consolidating more, like wholesale manufacturers of building products, like Builders First Source, Blue Links, LPX, those sort of names. They're still consolidating, but they're already pretty well consolidated. And cannabis is an emerging industry, and I think these people are delusional who think that things have been settled out. Like, they're in for a rude awakening. But it's an emerging, growing industry with tons of uncertainty. It's in the arc of development of new industry. Think auto companies back in the early 1900s. That's actually the metaphor I use for, an analogy I use for cannabis companies. And they radically consolidate. And you don't know there's freak things that happen that make a new person a market leader. Anyway, so auto industry, no one would object to me owning autos. And I probably should, well, anyway, so cannabis. So I'm going to say this. Two things. I know damn good and well that my channel is predominantly watched by people who are bullish uranium and offshore oil, and they help my channel grow, and some of them are loyal, some of you are loyal watchers, and I appreciate that. But I'm not a uranium guy or an offshore oil guy or any other kind of guy. I am the guy who, if I think something's inflecting or there's tailwinds or something's cheap and I just can't help myself, then I buy it. And I play cycles. Now, I'm not going to talk too much about cannabis, but that's what I do. So maybe gold's cheap, then it gets not cheap, then I sell it, then I move on to something else, and on that goes. Like, I'm not loyal to uranium or offshore. It's a place to make money, presumably in a short period of time. You'll get some wrong, you get some right. Hopefully the right makes up for the wrong and then compensates you for your time as well. And not just your losses, because then it's just a charity, and I guess you had fun, but that's my point. So, Sibanye Stillwater, I think platinum's been beaten up, and I think it really could inflect when, not really sure, but I think it could. So, like, I'm not loyal to platinum. So with that said, I suspect I am strongly and heavily going to be publishing a lot. I mean, I already have, just for context, if you do read my stuff, I normally write 3,000, 4,000 words. This Aerospace and Alloys article publication was 3,500 words. Right now, in the making, I don't know if I'm going to publish all at once or break it up. I'm not sure. But I have a 13,000 word piece, and I got tens of thousands more words because honestly, quite frankly, I have a lot of shit to talk on the cannabis sector, and I need to get that out of my system before I can start saying positive things. Now, this is what's crucial for you to understand. Okay? Everything I am going to write for probably the next month, because I'm going to try to pace these articles out, but also, even if I don't, subsequent numerous publications in all likelihood are going to be in regards with cannabis in mind. But this is what you need to understand and why you need to read and watch those articles. Because everything I say in those articles is, I don't like to speak in absolutes. Much of what I say, I don't like to speak in absolutes is an absolute statement. Anyway, much of what I write, the vast, vast, vast majority of what I write in regards to the cannabis sector, you can overlay to practically any commodity and or cyclical sector. That 13,000 words that I've written, you could literally replace the word cannabis with junior minor stocks. You could literally replace the word cannabis with shipping stocks. You could replace the word cannabis with EV companies. You could replace the word cannabis with auto companies of the early 1900s. On and on it goes. Anything that is cyclical and or a commodity that gets a lot of sentiment when it goes up a lot quick, which commodities do that, you can replace cannabis with that particular industry, sector, or sub-industry. Okay? So there are tons of lessons and ideas and ways to formulate thought and speech that you can take out of those articles. So yes, technically they're about cannabis per se, but I'm so light on cannabis specific things. Like, one thing I really touch upon is how all the podcasters, article writers, and so on and so forth put out such nonsensical garbage, hype. They miss vast swaths of factors to take into consideration. Like, how in the hell were they giving a buy recommendation? Now, this is crucial for you to know. How in the hell can an author give you a buy recommendation on a company that's trading at 100 times price to sales? How? And that's not a rhetorical question. That's not me virtue signaling to you of how stupid they are, how smart I am. I'm dead serious, because you will see that time and time again. Just look at some of these shipping stocks not too long ago. It's not just the EV, it's not just the tech AI bros, it's not just those morons or these morons, it's not the SaaS, software as a service company bros, who were paying ridiculous multiples not that long ago. And you will see in the commodity space, it wasn't that long ago, people were calling for $200 oil. How wrong they got that. And then guess what? $200 oil, you model some projections in your spreadsheet. Look how cheap these stocks are on 2025, $200 oil. It's like, and if you followed along with them and bought at the high, then guess what you did? You lost a bunch of money probably. Because at that point, why not go with the more risky leverage plays? So anyway, many of the criticisms I'm going to lay at the feet of the cannabis industry and its participants, and how they're complicit and complacent can just as well apply to the offshore, because let's say offshore takes off. I know, hard to imagine with how it's been behaving in almost last year. At some point, and this happened in 2020 or 2013, 2024, 2014, excuse me. You saw this play out there. Things are pie in the sky, and it must be that way forever. And then all these buy articles, and it's like, how could you recommend buying it? Like, if anything, the article should be around, should we consider taking some profits? Not buying. Is like, no, buying was 2, 3, 4 years ago. Like, it's not even a thought to entertain to buy it right now. Like, what are you talking about? But that's what they did. Many of them. Not all of them. Maybe even not the majority of them. But if 35% of them, a third of them is buy and strong buys, it's like, really? That's enough to influence a lot of people or to confuse people. And that's unfair and disingenuous. But anyway, my point is, and I'm going to sign off here, everything practically for the next month that I'm going to publish is using cannabis as an example, as a case study, but the vast majority of it applies to practically, what do I own here? Let's just quickly look at the names I have. It definitely applies to the uranium sector. Not currently applying to, actually applies to the gold sector. Why? Well, the gold names haven't ran that hard, or the silver names really haven't ran that hard. So you could say it's a basing troughing period. So, but people are so defeated by it because it hasn't done anything, because they thought a short squeeze was going to happen to some magical extent a couple of years ago. So now they're despondent and they're bag holders and this and that. That could be describing the cannabis sector. Let's see, Louisiana Pacific, home builders, that's a mature consolidated industry. Doesn't necessarily apply, but housing, home builders, talk about supply, demand, talk about pricing power, talk about, I heard a podcast in the past couple of days that said, with interest rates going up how they did, house prices shouldn't be so high. And it's like, what a stupid thing to say. Like, insofar as you only consider one variable of a multivariate equation, the answer that we've received isn't the right answer. Might it be because of the other variables that contribute? Like, shouldn't? Why shouldn't it? Because people shouldn't have locked in a low interest rate in 2020 and 2021? Like, it's foolish. It's a foolish statement to make. It shouldn't. They shouldn't be this high. Well, they should be this high when the supply demand is this offset because of people not willing to sell their homes, coupled with higher interest rates. So it actually should. Then Kodiak Gas Services. Oh yeah, people get, the Widowmaker. It's called the Widowmaker because people always get blown up. They leverage the hell out of it, much like cannabis investors of 2018. Remember back when nat gas was $10 over, or what was it? Well, high. It was high, remember? And then they were going to have a cold winter, and then things worked out, and then people got blown up on the trade. So yeah, we're just, gold, offshore oil, uranium. That's, the vast majority of my portfolio. So natural gas, like it applies to all of those. They're highly cyclical commodity industries. And cannabis has more than that, being that those are all mature markets for the most part. Cannabis has more problems going on, but I've said enough on that. I'm just talking in circles at this point. Thank you for watching, and please bear with me, and don't immediately, in a bigoted and biased, foolish fashion, disregard any article you ever see me publish about cannabis, because know that the applicability and things that you can learn and take away from that article there's a very high degree of probability that you can use that, and that's worthwhile to you. I believe that to be true. Because one reason I'm talking about it and looking at it is because it interests me in certain ways, but also like things I've observed about it and learned in that case study have helped me kind of think about the things I do in my hard assets, mature companies, helps elucidate some points and ideas. So that's the beauty of ideas. You can learn an idea somewhere, and then that idea can transcend the set of experiences, the set of investing domains, the set of categories and sectors and industries you invest in. You can learn something about cannabis, okay? If you were a cannabis investor who did everything wrong but learned everything right as well, like, man, you are so knowledgeable now. Like, cyclical commodity industry is for you because you've learned so many amazing, fantastic lessons that translate so well to those other industries, and vice versa. So maybe we can learn some things from the shipping industry and then apply that to the offshore industry. And then we can apply that to uranium industry and the platinum group metals industry and home builders industry, and on it goes. So thank you. And until next time.